the last class, if I remember correctly, uh, uh, Srivatsav and Mitran, both of you had mentioned that you would want to learn about a topic which is which is
Financial.
financial
Yeah, yeah.
literacy. Yeah. So financial literacy. Okay. If you look at the topic as such, this is nothing but a very practically relatable topic. Okay. Now let me share my screen so that we can play with what I'm saying. Just let me know once you're able to see my screen. Yeah. Can you
Yeah.
Yeah,
can you see the whiteboard as well?
yeah.
Okay.
Mhm.
So if you look at the topics that I've sent, okay, these are all relatable things, which is related to financial literacy. Financial literacy is nothing but to know how you are dealing with finances day in, day out. Because math is the only subject where we don't make assumptions. We don't believe anybody. Okay. We only believe what we can solve, what we can calculate. Now let me give you an example. Let's say I get $2,000 as salary. Okay. And my EMI for the house is $3,000. Can I survive? May
Maybe.
I'm sorry.
Maybe.
How?
I don't know what's EMI.
EMI means equal monthly installment. So, uh, uh, like when you live in a rented apartment, you give rent every month, right? If you are, let's say, the day you plan to buy a house, you will you will take loan from the bank, right?
Mm-hmm.
So, loan is another aspect of financial literacy, meaning you're borrowing money from somebody. Would
Mm-hmm.
somebody give you money just like that? No.
No.
Let's say if I need $10,000 to do something, will somebody give me just like that? No.
No.
They have no interest. And to make that interest, they will add interest. They will say, okay, I can give you $10,000 for 6 months if you give me 10,500 in return. So this extra $500 that I paid to that guy, that created that interest for that person to lend me the money. That is exactly what
Mm-hmm.
happens in the bank also. Let's say if I want to buy a house, let's say for 300K, okay? I'm not going for a very costly house. I don't have that much money or purchasing power. I will tell bank that, okay, I have decided on a house where I have to pay 300,000. They'll say, okay, fine, this is good. My rate of interest is 5%. Don't worry about this. You have to pay me 3,500. Oops. You have to pay me 3,500 every month for next 30 years. Okay. And I will give you 300,000 so that you can buy a house. So now I will say that this is my house, but I'm paying this much money to the bank every month. That is called EMI, equal monthly installment.
Mm-hmm.
So this is something similar to the rent that we pay. So if I'm staying in a house, in a rented apartment or a house, I'm paying some money to the owner of the house. That is called rent, right?
Mm-hmm.
What happens is, depending on how long I stay in that house, I will keep on paying the rent every month. And the day I decide to leave, I will just leave and move out. There's nothing that I own there in that house. Here, when I'm taking the loan from the bank, I am paying this much money every month and my loan amount is coming down. Okay. After 30 years, there is no loan. So I have this house becomes mine. If I'm alive till then, this house becomes mine. I don't have to pay anything after 30 years.
Mm-hmm.
That is what is called EMI. So that is my motivation. If I'm staying in a rented house for 30 years, there's nothing that I own. After 30 years, I can just move out of the house and I have nothing apart from my own belongings. That house is still with the owner. But if I'm daring to take a loan from the bank, and I'm able to pay this EMI every month, after 30 years, this house will become mine. I bought it for 300,000, maybe it will appreciate and become something worth 500,000. So this becomes my net worth. Okay, say okay, fine. I paid this much money every month for 30 years. After 30 years, I have a house which is worth this much. If I want to sell that house, I will have this much money in my bank account. Okay.
Mhm.
So now coming back to the point, when there are a lot of things that I talked about, right? I talked about EMI, I talked about my salary, I talked about loan, I talked about interest. These are the parts of the financial literacy. Now let's go back. The first statement that I made, that okay, if I'm getting $2,000 as salary every month and my EMI is $3,500, can I survive? Can I survive with this salary if I have to pay this much EMI every month?
No.
No. This is part of the financial literacy. As the first thing, that my expenses have to be less than what I earn. That's the only way I can survive. Now, I will not talk about your parents. I will talk about myself because I'm also a parent, right? I have two kids. What happens is, let's say, I'm just making it up, okay? I'm not telling you guys my exact salary. Let's say I have this much, I get this much salary every month, okay? I pay, let's say, this much money for my EMI or for my house, okay? I pay $600 for utilities, okay? That includes water, electricity, internet, whatnot, okay? Then let's say I'm paying $1,000 for grocery, okay? Grocery. Then let's say I'm sometimes I go out with my kids and family to eat out on the weekends, and I'm spending, let's say, $500 for eating out, okay? Then I'm keeping some money for my insurance and for my kids education for future. But what? Am I planning my things well? See, out of 5,000, 2,500 is gone for EMI, 600 for for utility, 1,000 for grocery. Okay, how much it is? 4,100. Then 500 for. Uh,
400 left, right?
I'm sorry,
$400 are left.
400 is left. But again, 500. I said this is
Oh,
for my insurance and other things. And what I'm left with is only 400. What if my kid falls sick, or I fall from the stairs and break my knees? Who's going to pay for it then? All this that you see around you is called part of your financial planning. And what you will plan will depend on how much literate we are. Imagine a person who's an elementary school dropout, okay? So who just knows to do some basic operations like addition, subtraction, that's it. And then that person has to go and take in loan from the bank for buying a house, and the bank says, I'll give you loan for 3% interest. What will that person understand from that? Nothing. So this is why it is very important for us to be financially literate, to be able to make financial decisions. And that is essentially what this topic covers. So if you guys want to open up your phone and look at the topics that I had mentioned as part of this, I'll just repeat it one more time, and then we'll go through that, each of them conceptually, so that you can relate to it. Budget and deals. Okay, budget and deals. Okay, then saving money. Okay, then budgeting and 50-30-20 rule. Budgeting and 50-30-20 rule. Okay, then loan and debts. So let's go step by step. Okay, let's look at the first one. What is budget and deal? What is budget? You would have heard let's say you go and tell your dad, okay, I want to go and see a BTS performance where I have to pay $800 for a ticket. What is the response you will get from your parents? I don't have
No.
budget. I don't have budget for this. I mean, they might not say no. I mean, parents care a lot for the kids' sentiments. They will not say a blunt no. They'll say, I don't have budget for this. I've not kept this extra money. So budget is something is the planning part. Meaning you say, okay, whatever salary I'm getting, how much I'm keeping for my rent, how much for EMI, how much for medical expenses, how much for grocery, how much for utility. And then what is left? Okay, I have only, let's say, $100 left. If my son is asking for $800 for a BTS performance, no, I don't have budget for this. Budget meaning I don't have money for this. Yeah, this is the basic thing about budget. Now, deals. I can buy a Nike shoe, okay, for $50, okay, from Rack Room Shoes, Rack Room store, whatever it is. I can buy the same shoe during the Thanksgiving, maybe for $40. If I go to, let's say, Stonebriar Mall, the same shoe might come for $80. So you see that the same brand, same model is sold at different prices during different times. What is the deal?
Deals.
These are deals. So deals are made based on different considerations. Like I plan my budget for the family based on how much I earn. Similarly, all the stores, the companies, the enterprises, they also plan how they want to kind of grow their business, how they want to expand their business, how they want to attract more customers by giving them deals which will increase their sales and overall profit. So let's take look at an example. Let's say a Nike shoe that I was talking about. Actual price the for buying it from the factory, let's say $30. Okay. Macy's will sell it for maybe $80. JC Penney might sell the same shoe for $45. So Macy's is saving how much? Making $50 per shoe. JC Penney is making $15 per shoe because Macy is probably spending more money in the stores. They are doing more promotion, more marketing. What might happen is during the normal season, Macy's is selling probably two shoes per month. I'm just making it up, okay? So they are making 50 into 2, this much money by selling the shoes. But if they give an offer saying that okay, I will sell the same shoe for $60 during Thanksgiving, meaning I'm giving a 25% discount, okay, during Thanksgiving. This is what you get to hear, right? 25% discount on all the stuff, 30% discount on all the stuff. What will happen is Macy's was selling two shoes per month for that model. Now, by reducing the price by 25%, everybody gets excited. Oh, yeah, I can buy the same shoe for 25% discount. So instead of two people buying that model, there might be probably 10 people who got excited. Okay. So earlier, Macy's was making $50 per pair. So they were earning $100. Now, by giving this 25% discount, they are able to sell 10 pieces, and every piece they are selling for 60. So they are making $30 per pair. So 10 pairs, that is $300. So look at the earning. By giving that 25% discount, they increase their profit from $100 to $300. Who got benefited? Everybody. Macy's was okay. Let me two pairs they were selling every month, and every pair they were making $50. I mean, basically, 30 was their purchase price, and the sale price was 80. Now they said, okay, I'm giving you 25% discount on this price. So they started selling for 60. Their purchase price is still 30. But instead of two, they are able to sell 10. So they are making this much money. 60 minus 30, 30. So they are making $300 now. Earlier, they were making $100 per month for that particular model. Now they are making $300. This is called deal, right? Macy's as a store or a seller was making this much profit every month. Now they're making this much profit every month. Now you and me, why we got excited? Because we wanted to buy from Macy's because we like that that store. It's a royal store. It has a lot of things. Okay, wonderful. But this in the same store, same product, I'm getting for 25% discount. So I'm happy because I'm getting 25% discount. Macy's is happy because their earning increased from $100 to $300. They are also get happy. They're making more money. So that is what is the deal. Am I clear so far?
Yeah.
Yes.
So budget and deal. Now let's look at the next one. Next one is saving money and saving it wisely. Okay. Now this is a very sensitive topic for people like me. I have a daughter who is ready to go to college next year. Have I saved for her fee? Probably not. Why? Because I was not making the savings wisely. Whatever money I was getting, let's say $5,000, I was spending on my EMI, 3,200. Again, I'm just doing some calculation. Okay, don't prove me right or wrong for this number. Okay, $600 for utility every month, $1,000 for grocery, $200 for medicine. Uh, let's say how much it is. 32 plus 6, 38, 48. All money gone. There's nothing that I am left with. Every month I'm just having hand to mouth. From where will I get the tuition fee for my daughter? I did not save it. So that is called bad saving or no saving or very unwise saving. So now imagine a person who was more intelligent, sensible than me, knowing that yes, the kid will go to college one day. What he or she could have done, okay, fine. I'll probably delay my house purchase plan. I will not go for buying a house where I have to pay this much EMI. What I will do is let me stay in an apartment till my daughter's tuition fees taken care. So I will stay in an apartment, decent size apartment for $1,500. My utility bill might remain the same. My grocery expenses will remain the same. My medical expenses will remain the same. Now, what is happening here? 1,500 plus 6, 2,100 plus 1,000, 3,100 plus 2, 3,300. How much I'm saving every month? This much money. If I save this for 2 years, how much money I'll have? 20,
3,400.
yeah. So 24 months. If I'm saving for two years, every year I'm saving
Hey,
almost like.
Virendra,
Uh,
Virendra, sorry to interrupt, but I just arrived at my home. So can I join on my computer?
yes, please.
Okay.
So, anyways, this is getting recorded, so I'm just explaining it, and I'll explain to you once you are back again. Okay, don't worry. So now you look at this person's intelligence. Somebody who was more intelligent than me. What did that person do? Is okay. Did not move to a house for make paying EMI because the salary was not enough, but he's still able to save this much money every month. That means he's able to save almost like 20 grands per year. 2 years, 40 grands. 1 year's tuition fee done. I I mean I could have bought this house 2 years later also. I would have had no worries about my kids' tuition fee. Correct. All that I'm telling you is not my actual scenario. This is a hypothetical situation, but I'm telling you the calculation side of it. And that is where the financial literacy comes into picture. Saving and saving wisely. Trust me, if people get 1 million per month salary, that is also not enough. And there are people who are earning $1,000 a month, they are also able to live happily. It depends on how they plan their finances, how do they plan their budget, how do they allocate budget for different things. Okay, so this is part of the financial literacy, financial planning, or saving versus saving wisely. Any doubt so far? Srivatsav,
No. Mm.
Pratik.
Yeah,
Yeah, Pratik, are you with me so far?
yeah, I'm with you.
Am I making sense?
Yeah,
Okay, good. Because if I'm not making sense, I'm wasting your time. That's what I'm trying to avoid. Okay. All right. Now, next thing comes as 50-30-20 rule. This is something, okay, I'll be honest with you guys. Okay. This is something that I had not learned when I was studying myself. This thing I learned when I was teaching my elder daughter who's about to go to college next year. And I found that this is a very interesting concept. This says need versus want versus savings. So this gives you a guidance with respect to how you should be planning your finances. This is a need, meaning this percentage of your salary or your earning, people should consider for needs. Meaning, let's see if I'm earning $1,000 a month, that means 50% of that, which is $500, should be planned for need. What is need? Need is something that you cannot avoid. You need to have a house to live, or a place to live, be it a rented house or be it a loaned house. You have to have grocery. You have to eat. You cannot live without eating. You have to pay utility bills. You cannot avoid that. You need electricity. You need water. You need internet also in current times. That is a need. Okay. So 50% of your earnings should be planned for your needs. No denying that. 30% of your salary can go for want or should be planned for want. Now, what do I want? I okay. Hey Mitran, welcome back.
Hi.
So Mitran, we just talked about the budgeting, planning, saving, deals till you were here, and then we talked about saving and saving wisely. Right, that is where I was.
Uh, mm, oh, okay.
Now,
Anything
yeah,
anything else I missed? Anything else I missed?
no. So between you left and you joined, the topic that I started was called budgeting and
Oh, okay.
budgeting rule, where I was acknowledging that this 50-30-20 rule is something which is used for budgeting, and this is
Uh,
what take into account. So
okay.
50 means 50%, 30 means 30%, 20 means 20%. So 50% of your earnings should be planned for what you need. So if you're earning $1,000 a month, 50% of that should be going or should be planned for what you need. And your needs are your food, your place to live. Okay. That could be a rented apartment or something that you cannot avoid. Why I'm saying you cannot avoid, because staying in a rented apartment versus a house, there's a thin line between the need and want. Staying in a rented apartment is a need. You need to have a roof on your head. Staying in a house could be your want. I mean, I can always live in an apartment. My family will get all the safety, security, and the cushion against the bad climate, heat, winter, whatever it is. Right, staying in an apartment also, but paying EMI, having a house could be a want, is what I mean. What I would personally think, okay, right? Because there's no compulsion unless you have enough money to have a house. So this is for your need. 50% should be planned for your need. These are expenses that you cannot avoid. Want is something that you would want, meaning like paying the EMI, having a better car, staying in a locality which is closer to where my kids go to school, even if that comes for extra cost. Right, these are the things that are non-negotiable, but you can still decide. I mean, if you are hard pressed for money, you might think of cutting down on this cost. This category you can probably look at cutting down. Okay, let's say somebody making $1,000. Would they plan to live in Frisco? No, they know that okay, Frisco probably is expensive. I might want to go 10 miles away so that my rental or my EMI comes down, right? Maybe 10 years ago when Plano was more more popular, everybody was moving to Plano because they knew okay, Plano is happening, but it's little expensive. People who had better foresight, they say okay, fine, I can still go and buy a big land in Salina, and then I would probably build a house once people start moving to that place. So that is the want part. Okay, so 50% of your earnings should be planned for all the needs that is non-negotiable, be it health, be it eating, be it survival, anything for survival. 30% is your for your want, and the 20% is the saving part. This is where many of the people go wrong. From your earning, if you don't plan a saving for a rainy day, be it for for taking care of the health thing for the family, be it for kids education, be it for anything that comes unplanned, that is where it goes wrong. So that's why this budgeting says that okay, this is the rule to be followed: 50, 30, 20. Okay, so 50% for the need, 30% for the want, and 20% for saving for future, for a rainy day. Any questions so far? Yeah. Say what's up, Mitran, Pratik.
No.
No. Am I saying your name correctly, Pratik?
It's Prince.
Praneet, right?
Yeah.
Praneet. Okay, sorry, man. Sorry, I will take some time. I'm getting older. I keep forgetting things, but yeah, give me a few classes. I'll not mess with your name. Okay, Praneet. And now it's
Yeah.
recorded in the video also, right? It goes in YouTube. I mean, everybody will know what kind of a mistake I make, right? Okay, Praneet. I'll try that. Okay. Now, so far, any confusion?
No.
No.
I don't think I have any confusion so far.
Okay, wonderful. Now comes the loans and debts. What is loan? Everything is loan. I live in a house, that is on loan. We buy car, we don't pay the entire price of the car. We borrowed from the loan, bank gives loan. We keep paying them back month on month. Now, even when you guys grow up, if your parents have saved a lot of money, they will pay for your college tuition fee, or they'll say, okay, fine, we get student loans. We can get student loan. Part of it they will pay, part of it you will pay, depending on how it works in future, right? So loan is something which has become a very integral part of our lives. Now, nobody does anything for free. Nobody likes you and me to do any favor to us. They have their own interest. And that is exactly what I'm coming to. Interest. Interest is what makes everything interesting. You want to borrow $100 from somebody, they'll say, okay, fine, $100 I will give you. You just give me 120 in return. If you're returning it this year. If you're returning it next year, you'll have to pay 140 maybe. So this is what is a loan. Somebody gives you money and they ask you to give some extra money in lieu of that, which is called interest. And that is the only motivation for anybody to give loan. Tomorrow, if the federal government this passes a law saying that none of the banks can get interest for giving loans, trust me, there'll be no loan thereafter. Okay.
That
So
would be good for the people because they don't need to pay extra money.
that'll be good for the people, but think of it this way. Now let's get into an interesting debate. Now let's say I'm working for a bank, and bank. How does the bank survive? Somebody gives money. Somebody saves their money in the bank. Bank doesn't have their own money. They get the money into their their position by because of people are saving their money in the bank, saying that this is safe and secure. And bank gives some interest on the top of that. Let's say if you save $100 in the bank, they'll probably give you $1 or $2 extra. Okay. Now, from where does the bank give money? They once you save money, okay, let's give an example. Let's look at an example here. If let's say I am one customer, Praneeth is another customer, Srivatsam is another customer, and Mithran is another customer. We have four customers, okay? And there's a bank. I have $100, you guys have $100, we all save in the bank. We have an account in the bank where we say, okay, fine, I have this much money in my account.
Uh-huh.
Bank got $100 from all of us. Now bank has $400. And probably the bank will give $1 to each of us by end of the year. That's interest. Say, okay, thanks for saving in our account. I'm giving you interest. So bank got $400 and bank gave $1 extra to everybody. So bank at the end of the year will give $404. So they are losing $4 right now. Now
Oh,
what bank will do is, fine, I have $400. Let me see if somebody wants to borrow money. And they will find a fifth person who is in need of a money. So that guy will say, okay, give me loan. Bank will say, okay, I can give you loan. You have to just pay me 5% per year. 5% of $400. How much is that?
uh, yes, it's like
20?
300.
20? 5% of 400. 20? 5% of 400. This is how you calculate percentage.
Uh-huh.
This is
0.05.
$20. So bank used our money to give loan to somebody else. Okay. We
Uh-huh.
four gave $100 each. So we gave $400 to bank. Bank took this money and gave that as a loan to somebody else and got $20 as an interest. So that person, when that person returns to the bank, they will return 400 plus 20.
420.
So and bank, when we saved our money in bank said, okay, I'll give you $1 each extra. So bank took our money, gave us 404, and they made 420. So 420 minus 404. This is what apparently bank made from this whole transaction. They saved our money in their account. They lended that money to somebody else, got interest from that, and they made this much money extra. This is where bank makes money. They take your money, give you a little bit of interest. They give that money to somebody else as a loan and take higher interest. And that difference between the interest from what they lend versus the interest that they give us, that is where the bank makes money. So to your point, Srivatsam, if banks stop taking interest, they will not have this money.
Uh-huh.
They will not be able to give salaries to their employees because if they are not making money, how will they spend money? So the first thumb rule is for survival. If you cannot make money, you cannot spend money. So everybody has to make money. You and I are living here because your parents are making money. I'm able to make money. That's why we are able to live in a country like US. The day we stop making money, we will not be able to live here. Correct?
Yeah.
So that is the thumb rule. It sounds mean, but actually that's the basic rule for survival. Money is an important part of our lives to survive. We don't have to earn money through a bad
Uh-huh.
means, but we have to earn money in the right way. That's what bank is doing. Bank's deal is very simple. That I will spend money. I mean, I will get money. I will save your money in my account, give that money to other people. From that, whatever interest, the difference of interest is what becomes my earning, which I will use for giving salary to my employee, and that becomes my profit. I mean, the additional money becomes a profit. Okay.
Uh-huh.
So that is called the loan. Okay. Let's say if I'm buying a car, let's say $30,000. Okay. So I will say, okay, I have only $2,000. I go and talk to the car dealer. Car dealer says, yeah, yeah, you can take loan from the bank. I have tie-ups. You give me this as a down payment. Remaining 28,000 you can take as a loan. There are different banks. Some bank will say, okay, I'll take 5% interest. Somebody will say, I'll take 10% interest, whatever. And depending on what you are comfortable with or from where you are getting loan, you will go for it. So you don't have to have $30,000 for buying the car. You can go buy a car with making smallest down payment, and rest of the money you will pay with interest to the bank. And bank pays the money to the car dealer and keeps taking the monthly installment from you till everything is settled. Okay. So
Yeah.
this is the loan that you have taken. Now, what is debt? Let's say I am earning, let's say this, okay, and I have taken loan for house, for car, for my kids' education, everything. Let's say for a house, I have this much loan.
Uh-huh.
For the car, still have to pay $23,000. For a student loan, I have to pay, let's say, $15,000. This is my debt. This is my total balance. This is the total money that I owe somebody. Okay, that is called debt. So all the money that I owe to somebody, that is my debt. This is for bank. They are saying loan. They have loaned us this money. Bank has loaned this money for my car. Bank has loaned this money for my kids' education. For the bank, it is loan. For me, it is a debt. And people use that word interchangeably. They will say, okay, I have taken this much loan. It's the same thing. But at the end of the day, it is called debt. This is the money that I owe somebody. This is not my financial sheet, by the way. But I'm just telling you guys for explaining it. Okay. Any questions so far?
No.
So I'm making you guys
Oh,
actually literate because I do it for a living, right? So when when same way, your parents must be doing the same thing. They look at their finances. They look at what is the loan I have, how much money I have borrowed, whom I have to pay when, what is my monthly installment for different things that I have taken. Once they get their salary, they must be paying to the bank, to the people with whom they borrowed, and they have a plan. This is called financial planning or budgeting based on your earnings. Okay. So far we have looked at loans, debts, budget, what is a deal, saving money, the budgeting, and the 50-30-20 rule. Okay. And we talk a little bit about the interest also. Yeah. That interest is something that makes things interesting for people. Okay. Now look at it from bank's perspective or somebody who is lending money. For them, what is the interest? Is how much interest they are asking you to pay. That is their interest. What is your and my interest as a borrower? We always look at where there's more interest rate versus less interest rate. Wherever the interest rate is less, that is where I'll go. If one bank says, okay, I'll charge you 5%, other bank says I'll charge you 2.5%, I'll certainly go to the second bank because that guy charging me less. That means I'm paying less interest, right? So that is the interest part of it. Any questions so far before I proceed further?
No.
No. Praneet, Mitran, and see what's up. Any
Uh,
anything that you're not able to relate? You guys must not have all these things, but you would have certainly heard some of this. Yeah.
yeah.
Yes, Praneet. How much of it you have learned? I mean, you have heard. Let's say deals. Have you gotten
Yeah.
excited by hearing different deals during Thanksgiving, Christmas, and all?
Yeah.
Yeah. And that's natural, right? I mean, they say, yeah, this guy is giving a very good deal, so I should go for this. At least you would have convinced your parents, this is a better deal. Let's try this out. Yeah.
Yeah.
And anything with respect to financial literacy, right? These are mathematical terms, mathematical situations, relatable things that we see day in, day out in our lives. Okay. And that is what is deal. Okay. So now we have looked at certain aspects of financial literacy, and we will continue with the next topic. Any questions you have before I proceed further?
No, I
No?
don't think I have any.
Okay. Praneeth, same thing for you and Srivatsam?
Yeah, I
Yes, no.
guess there are no questions.
Okay. So I will keep, for lack of better word, I'll keep poking you guys just to make sure that I keep you guys awake. And I make sure that I will get convinced only when I hear you guys saying that you have no questions. Because if you have questions, I don't mind explaining the same thing again and again. But don't keep anything as assumed. Okay. It's okay to ask questions. I don't get offended or frustrated if somebody asks me same question or same thing to be explained 5 times. I feel happier when I hear a loud yes from you guys say, okay, yes, I understood. That's when my job is done. Okay. Now let's go to something called financial goal. Before I trying to teach you guys anything, tell me what financial goal you have. Do you have any financial goal?
Um, I don't think we're going to experience it. I think we're just learning about it. We're not like gonna be. We're not adults yet. We're just still
No,
teenagers yet.
I don't agree. I'll tell you why. I'll certainly tell you why. When I was small, you guys are now, by God's grace, you are in a much better situation. I belong to a very humble family. For me to even get to taste a cold drink was a big deal. Okay. I mean, we were like a family of 5 siblings. Not a lot of money was earned by my parents. So if I want to drink cold drink, that will happen only when there's a marriage or any big event where we are invited, where we don't have to spend money to get something. So when I was small, like a child, I used to save small sums of money, like 50 paise, 100, 1 rupee, 2 rupee kind of thing, to make it 10. So once I have 10, then I can go and get buy a cold drink for myself, and I can enjoy that as the best thing of my life. So those used to be my financial goal. That okay, let me keep on saving 50 cents, 50 paise, 1 rupee, 2 rupee to make it 10. And once I have 10, then I can cherish something. That was one form of financial goal. Now, if you guys try relating that, see, financial goal doesn't really mean that no, I have to save $500,000. That only can be a financial goal. There's no limit for it. You can have different goals depending on different objective, different targets, different plans, different strategies. I see my kids saving money, saying okay, fine, once I have $35, I'll go and buy a that instant camera for myself. That could be a financial goal depending on your age. So that's why I said, Mitran, I do not agree. Everybody, whoever learns the different denomination of money, as soon as you learn that, everybody ends up having some goal in some shape or form. You might be liking the Xbox. You'll say okay, fine. I've seen kids saving money for Xbox. Say okay, fine, 50% I will save, 50% I will, my parents will sponsor, right? I have saved money for buying cricket bat also when I was small. When people come to our family, they'll give 2 rupee, 5 rupee, 10 rupee, like when they're going back as a ritual. I'll keep on saving that. Once I had 150 rupees, I bought a cricket bat by myself. So that was a financial goal. So all that non-relatable stories I told you guys, those are practical examples, and it is hard to believe that there's any kid or any of us, you know, who would not have any kind of goal. If you don't have one, I would say start practicing that. You can keep one. That way, by the time you guys are becoming adult, you would have a very good view of, a very good ability to plan it. You don't really have to spend the money that you know save. You just have to have that habit of saving, because that makes you, you know or gets you one step closer to how you will deal with the practical things in life. Okay, am I talking too much?
Oh, okay.
Making sense, right?
Yeah.
Yeah.
So tell me one financial goal that you had in last 2 years. Let me hear you guys also. I've been talking non-stop.
I don't know. I never had any.
Okay, talk to your daddy. See if he can guide you to have one. Just a goal. It doesn't do any damage. I'm not saying that we have to do anything mischievous or bad to have a goal. It's just a simple goal. Okay. How about you, Praneeth and Srivatsam? Did you have any financial goal in last 2 years? Big or small, doesn't matter.
Tuition fees,
I'm sorry.
college tuition fees.
College tuition fees for your parents, you don't have to worry about it.
Okay,
Okay.
Rolls Royce.
I'm sorry.
Rolls Royce.
That's a good goal. But yeah, for that we'll have to work hard, learn a lot of things, become successful, and then obviously these things come as a byproduct. If you study well, if you learn well, if you have a very clear focus of doing right things at right time, those things are not impossible for sure. Yep. Okay. How about you, Praneeth? Was there any
Uh,
financial goal that you had set for yourself in last 2 years?
not much.
Not much. Okay. Start thinking about it. See, these are. I don't teach math as a subject for you guys to feel the pressure. Math is. I should have left math 30 years ago. I mean, I finished my engineering almost 30 years. Not 30, 24 years ago. So there was no compelling need for me to teach you guys math. I started teaching math because this is a subject that I find quite relatable. This is something that is with me ever, always. Every day morning when I wake up, every Thanksgiving makes me revise my percentage learning and percentage knowledge. Every time I borrow a loan from the bank, I get to practice simple interest and compound interest. Yeah, a percentage. So these are the concepts that you learn and stays with you. So my recommendation to you guys would be, don't learn math to score, learn math to make it a part of your life. That is how you will enjoy it, and it's truly a subject that you will cherish if you know make it a usable part of your day-to-day routine. Okay. Okay, we talked about financial goals. Let's look at insurance. What is your understanding of insurance? What is that you guys know about insurance?
They if you like your car gets damaged or something, they'll pay like a part of that damage
Mhm.
cost to
Like a
fix it.
protection for the loan.
Okay, that is another aspect. Okay, what else? Okay, Mitran, any thoughts around this one? What is insurance? Forget about car
Um,
insurance or anything.
um, insurance. Is it all I know that all I think about is it's kind of like you're paying bills, but it's kind of like different. That's what I would say.
Okay, so insurance is nothing but a type of assurance for your coverage or for your well-being. Okay.
Example.
Okay, so I'm coming to that. So when you talk about insurance, let's look at some bad scenarios. Okay, let's say I'm the only bread earner of my family. If something happens to me tomorrow, what could go wrong?
You don't
My
have
family
enough
will
money.
have no my
Hmm?
family will have no money to buy groceries. We might have to leave the house because we cannot pay rent, the EMI, the rent. The kids might have to go stop going to school because they cannot buy books. They cannot pay the tuition fee. Yeah. So to avoid that, there are certain schemes or there are certain companies. They say, okay, fine, don't worry about it. You pay a small sum to us so that if something goes wrong, we'll take care of your loved ones. If somebody in the worst case scenario, if something unfortunate happens, they will pay a lump sum money to your family. That you don't have to worry about the home insurance, home loan. You don't have to worry about the kids' tuition fee. Let's say somebody takes a insurance for 2 million. They might have to pay, let's say, $500 per month. But that $500 ensures that family is taken care. Same way now, if you relate that with the car insurance, what happens? Let's say you bought a car for $50,000 and somebody comes and hits your car and runs away. That $50,000 is gone. What the car insurance company says, you just pay me $200 a month. In certain scenarios, somebody comes and hits your car. If somebody steals your car, we'll pay you the money. We'll take care of your all the expenses. So imagine a scenario where nothing happens. No accident, nothing. 5 years you keep on paying insurance to the insurance company. You are actually making extra expenses. But if something goes wrong, this $200 will save your thousands of dollars because you had the coverage from insurance side. So be it for life, be it for car, or for any kind of a thing, even home insurance. Let's say tomorrow there's a thunder, there's a cyclone, typhoon, whatnot, tornado wipes off my house. If I don't have home insurance, I'll be on the road. To ensure that if something unknown, unplanned, uncontrollable happens, I am covered. So insurance is nothing but a coverage or a protection offered with a cost. So for life insurance, making sure that my family doesn't suffer, I have to take life insurance. I'm paying some money extra, but that gives me a peace of mind that okay, if something bad happens, my family is taken care. Car insurance. Something goes wrong with the car, though I'm paying extra money, but something goes wrong with the car is taken care. Home insurance. Anything going wrong with the home, no, uncontrolled, unforeseen, I don't have to worry. My home will get reconstructed because I have insurance. That is what is insurance. Insurance is an assurance to ensure that you are taken care if something unplanned happens, but that comes with a cost. So that is why, be it home insurance, be it car insurance, be it life insurance, we pay extra money to some certain insurance agencies, and they make money because let's say they will give insurance to 100 people, they will take money from 100 people. Maybe one or two people might end up coming across a bad times when they have to pay for them, but from 99 people, that the money that they make, that is still a good earning for them. So all the Sun Life insurance, MetLife, Aetna, all that they make a lot of money because it is an assurance that you get by paying extra money. And these insurance companies, since they do insurance for a lot of people, only few people suffer, whom they end up paying. Rest all people just pay for ensuring the coverage, and that is their earning actually. Okay, so that is insurance. Any doubt?
No.
No.
Praneeth, Srivatsa?
No.
Yeah, clear. So this is where we will stop our financial literacy part of it, and we still have few more topics to cover, which is investment and retirement, career and education, taxes and tax reform. These topics we'll cover in the class tomorrow. It is more of a conceptual thing. I'm trying to give you guys an example of practically relatable things that you would have heard enough, but you probably did not bother to think about it because you did not have to deal with it by yourself. But these are the information that we all need to know, because any which way we end up dealing with it, if not now, at some point in time. Yeah. So this is where we will stop, and we'll meet again tomorrow, same time.
Okay.
Yeah.
Okay.
All right.